On today's Domain Sherpa, we're joined by Jimmy Song and Andrew Rosener. Jimmy is one of the top experts in the world on cryptocurrency, but on top of that, he is definitely one of the most extroverted, talkative, interesting, easy guys to talk to in the crypto space. Enjoy a great conversation between him, Andrew Rosener, and myself. First, serious about online trading? Secure your funds, keep your merchandise safe, and use a company that keeps the buyer and seller protected the whole way through. That's escrow.com. Payments you can trust. Hey Sherpa Network, I'm Tess Diaz, executive producer of DomainSherpa.com, and today we are delighted to have Jimmy Song here to discuss Bitcoin and domain names with Andrew Rosener, see where they intersect. Jimmy, you are such a big name in the crypto space, Bitcoin educator, developer, and entrepreneur, joining us from Austin, Texas. Thank you for being here.
Oh, thank you for having me. It's a lot of fun.
Delighted. Yeah, and Drew Rosener, CEO of MediaOptions.com, domain brokerage firm. Thank you as well for joining us today.
Thank you, Jimmy. Thanks for coming on. Really glad to have you here. I've been following your work for some time.
Thank you.
Jimmy, give us a quick overview of who you are. I assume most of our listeners, you need no introduction, but just in case, who are you and what have you been up to?
Sorry, my internet connection says it's unstable. Can you hear me?
Yeah, you froze for a second, but don't worry about it. It'll all get edited, so it doesn't.
Okay, all right.
I thought maybe you just didn't know who you were.
Yeah, I've been a programmer for the last 20 years. Ever since I got out of college, I've been basically a startup veteran for most of my career. Up until about 5 years ago, when I started to go into Bitcoin full time. I've been a programmer in the Bitcoin space for about the last 5 years. During that time, I worked for various different companies. About a couple of years ago, I started publishing a lot more articles. I started teaching a class programming blockchain to developers that wanted to learn about Bitcoin. I'm in the middle of writing a book, almost finished. So trying to do that as well. I'm also a venture partner at Blockchain Capital. I consult for various companies. I speak at conferences. So there's a lot of different parts to what I am, and that's not even getting into my personal life or anything like that. That's just my professional. So. It's a hard question to answer. Who is Jimmy Song? Hopefully, I'm not easily summed up in a couple of sentences. But yeah, that's
I think you're a smart guy who wears a lot of hats.
I do that, yeah.
So we kind of wanted to kick it off, Jimmy, with something that Andrew has been looking at for a long time with, given that currently for every chain transaction with any cryptocurrency, the data has to pass through the DNS system. So we have some questions about how domains are foundational to cryptocurrency, but also maybe a potential Achilles heel, even for the most secure blockchains like Bitcoin. What are your thoughts on that? And Drew, you jump in as you like. I think this could be a very interesting conversation. Jimmy coming from the technical side so much.
Well, so the only DNS single point of failure that I would say exists in Bitcoin right now is in the Bitcoin core client. When you first run the software, what it does is it goes to 3 known domain names that are run by core developers. So one of them is sipa.be, that's run by Peter Woolley. Another one is the bluemat.me, that's run by Matt Corallo. And then there's another one by Jonas Schnelli, which I can't remember his domain name. But those are what it queries to get some IP addresses in order to find other peers to connect to. the Bitcoin software is a peer-to-peer network software. So it needs other peers in order to download the blockchain or to hear about new transactions, other blocks. So that I would say is probably the biggest sort of crossover with domain names, is that it does depend on those domain names. And if you can man in the middle of that, it's possible that there might be a vulnerability. But for the most part, what Bitcoin does is it works off of IP addresses or Tor addresses, or both IPv4 and IPv6. You can go to something like bitnodes.earn.com and find a bunch of IP addresses of different nodes on the network, copy those into your configuration, and that way you don't have to bootstrap to these particular domain names. But I mean, the thing about the networking protocol of Bitcoin is that it's not necessarily critical. There is, for example, something like the Blockstream satellite, which lets you get all of the broadcast blocks via satellite. It doesn't even require the internet. There's a satellite channel that you can receive things at. You can also broadcast transactions using something called using radio waves. I think Samurai Wallet did something like that, where it'll broadcast to within like 20 miles, and then if you have other broadcasting stations, then they can broadcast as well.
It acts like a mesh network.
Yeah, it's definitely a mesh network.
But it basically acts like almost like a side chain, right? Because those transactions aren't actually being recorded on chain until they
make it into a block. It's not a side chain per se. It's what you would call the mempool. It's sort of like pre getting into a block. It only gets into a block once a miner finds a proof of work. But until then, it sort of sits there until miner decides, okay, the fees on this are enough for me to take it. I wouldn't necessarily say it's like, other than the domain names that are hard coded into core, and other libraries use different domain names to go and get like new IP addresses, and those can be bootstrapped in different ways as well. I wouldn't say there's that much, although I run a couple nodes. I have programmingblockchain.com, and I have a testnet Bitcoin node running on tbtc.programmingblockchain.com. I have a full Bitcoin node running on btc.programmingblockchain.com, and a lot of other companies utilize that as a way to connect to sort of known things. So there is something like that about DNS that's very convenient. The thing about DNS that I think a lot of Bitcoiners are kind of hesitant about is that it's, at least for a long time, it was dominated by network solutions. It was a single entity. It's a centralized place where you have to do the registration. So no longer network solutions. I mean, they were sort of the client-facing operation. But the centralized entity is ICANN, which is the sort of governing body of the internet. And they create new TLDs and all that stuff.
Exactly.
And basically, it's what's kind of scary about it, at least from like a Bitcoin perspective, is that if you do have a domain name and the U.S. government wants to seize it, they can. And that kind of sucks, because that means that you are dependent on a third party to give you rights to it. When you quote unquote own a domain, you don't really own a domain unless you're playing within the rules of ICANN or whoever is doing it.
Yeah, it's really a lease. It's really a 10-year, up to 10-year lease, 1 and 10-year lease that you can indefinitely renew as long as you play by the rules. But so I think in theory, I agree with what you're saying. I mean, everything you're saying is fact. But in reality, I mean, for Bitcoin to scale and to be adopted at scale by, the average Joe, I feel like it does depend on the current DNS system. And, ultimately it can only ever be as decentralized as the internet is.
I mean, it depends on what other systems come, right? Like it's possible that we get some sort of like a radio mesh network of core relays or something like that, and that becomes like a second dark internet or something, and people go on there. It's entirely possible. We have no idea what the future holds. Right now, the past 20 years or so, it's very clear that the DNS system is what dominates, how people find things on the internet. And that's, largely where your expertise is in, figuring out what good ways to market certain things are. It's a large part of the discovery of certain things that domain names come into play. There was a project a while back. I don't know. Have you heard of Namecoin?
Yeah.
Yeah.
But nobody wanted it.
Well, so here's the thing about Namecoin. It was actually one of the very first altcoins off of Bitcoin. And the idea was you could have a decentralized DNS. And they actually had a .bit domain that they wanted to have people registered. They had this very clever system where you would pay for a quote unquote domain, and it's leased to you more or less by that blockchain. But it's done in such a way that you don't know the domain name until after you've paid for it and it's in the blockchain. Then you can prove it so that no one can sort of snipe you out of that domain name. So it was a very clever system. Unfortunately, it never really got it. I could never really get it working, right? You can try all these plugins to a browser and everything else, but none of the .bit domains ever resolved to anything. And the other thing was that the developers stopped working on it, so it never. Namecoin's a completely abandoned project at this point. So it's kind of sad.
It comes back to my premise, right? If I step back for 1 second. The whole reason I give this subject so much thought is because it's the only thing that keeps me up at night, right? I love domains. I think domain names are the bee's knees. I think, domain names are the foundational infrastructure for the digital economy, which is the most important economy in the world. And I repeat this over and over, and it's okay, so where are my, threat vectors? And it's some new technology that basically replaces the current DNS system, like Namecoin, okay? And ultimately, my argument for why that's not going to happen is the same as why you might argue that there's not going to be any altcoin that will replace Bitcoin. I'm making some assumptions here. And it's that it's network effect, right? It's so much infrastructure and so much mind share has been built on domain names, specifically .com, that it would be so difficult to upend that. And the same could be said for Bitcoin, or at least that's how I feel, is that it's you can make something, the barrier to entry is virtually zero. And so you can just copy the Bitcoin blockchain and make some tweaks and then launch a new altcoin. And now you're Bitcoin Cash 2. Or Bitcoin, Bitcoin Lisbon.
There are 84 hard forks of Bitcoin, so there's a lot of them. Including obscure ones like Bitcoin Pizza or whatever. There's a lot of them, and most of them aren't worth anything for that reason. And
I think you bring up Bitcoin Pizza.
Yeah, you bring up a really good point, though. There is something called a Schelling point, and if you've studied sort of behavioral economics or something, that's a concept. But basically, the concept is you and I are in a city, we can't communicate to each other. What do you do to meet up? You want to make sure that you guys are meeting up. What do you do? And generally, if you're in New York City, what people end up doing is saying, okay, well, I'll go to Grand Central at noon because that's the most central place, the most obvious place, and noon is just the most central time. That's where you go. And that's what Bitcoin is in many ways. That's what .com domain names are. People by default go to .com because everyone else goes to .com. So in that way, you make that argument, and I totally agree that right now that is the Schelling point for domain names is .com. If you're thinking, okay, if you hear of a company name, the first thing you do is you go to that company name .com and hope you hit it, or maybe you Google it or something like that.
And if it's anything else, you better specify. Otherwise, you're going to your customer, your audience is going to go to .com.
Yeah, absolutely. And this was what blockchain.info did for a long time is they had to advertise the fact that they were .info. think they got the .com domain name, so they're now trying to say we're .com now. But that's a whole.
And now they're trying to sue the .io.
Yeah,
which I thought was kind of
right. Well, that's another whole thing. But
that's something we want to talk about.
Okay, all right. But let me finish my point on this particular thing. The Schelling point, social coordination has a big effect. But that said, here's the thing. ICANN controls .com. So it's entirely possible that at some point that the rules get so restrictive that people aren't able to utilize this stuff. Now, I'm not saying that it's anytime soon or whatever. Yeah. But it's possible that that organization gets taken over and it makes it so difficult for people to go and get a domain name that a new Schelling point might occur. And this has happened before, right? Like for a long time on the darknet, the Silk Road was the Schelling point. That's where people went because that's where the sellers were. That's where the buyers went. Kind of like eBay. That's where sellers go. That's where buyers go. But once they shut down, there was a new Schelling point, Alphabet. When they shut down, there's another Schelling point. This anything centralized has a tendency to like. I think it's like what Buffett says. Like you want to invest in a company that's so good that even an idiot will run it because eventually an idiot will. And that's kind of the idea here is that with something decentralized, like there's nobody running it, but with something like it's possible that an idiot will run it. They will make it super restrictive that .com will no longer be the Schelling point at some point. So, like it's been there for 20 years. So I expect it to last at least another 20. But eventually that may happen. So there's a fragility to .com domains that I don't think Bitcoin necessarily has. So that's the distinction I wanted to make.
I'd almost argue that there's so if we say that the two options are it remains centralized, and because of its centralization, it'll have a tendency to sort of erode, or its network effects will erode, and therefore its importance as the Schelling point will erode. And then the flip side of that is that it, as this digital economy and all of the social implications that develop, ICANN becomes no longer necessary and it moves to a decentralized infrastructure, which, there's a lot of pressure toward, not necessarily entirely decentralized, but a more multi-stakeholder model, which increases decentralization. And so I think, I would argue there's probably a better chance of it moving toward decentralized model because it's like, if we're going to decentralize any government organization, it seems like that's like the obvious one to start with because the domain names and blockchains seemingly would play very nice together.
And it's really tough though, because like who pays for what and who collects it and what do you do with the funds and like these are all
we have
like
that problem now. They have like I don't want to just throw out numbers, but I believe it's like almost $200 million sitting in a bank account. They just had a multi-stakeholder meeting to talk about what are we going to do with these funds and what are we what's our mandate. They're sitting on $200 million and it's like, what do we do with it?
Yeah, and this is the problem, right? Like it's in a centralized, entity. Well, it goes to a centralized entity. At least you know where that is, and there's an obvious profit motive and everything else. Any decentralized system, it is extremely difficult to work out the incentives in such a way that it works for everybody. Because if you make it too cheap, what's going to happen? Everyone's going to register every domain name that they could think of, like for a penny or whatever. If you make it too expensive.
This is where you and I disagree. And this is one of the reasons I wanted you on here, because I don't understand you on this point. So you say if you make it too cheap, everybody's going to go out and register all these domains. So where's the problem? You are, by definition, if you are a Bitcoin maximum,
well, so here's
you want to define yourself as, you must believe in free market capitalism. And so
that's fine. That's totally fine. It just becomes very unusable the more you have, right? Like if you register 2 billion domain names because they're like, a fraction of a penny each.
Yeah.
Then everything's going to be slower. Every DNS server needs to serve 2 billion records, right? Like, that's not cheap. And updating all of that, propagating all of that, who's paying for all that stuff? There are problems with scalability that you have to think about in any decentralized system. The minute you have, you have things that are that cheap. And like making sure that all of the incentives are aligned and stuff like that is not easy. And like if you are able to register domains for a fraction of a penny, that adds like all sorts of like Sybil attacks or whatever.
Yeah, exactly. And they should never be that cheap.
Yeah, so you have to be careful about like design. What's that?
The approximate cost today, .de, the German domain extension, is probably the most efficiently run, I would say. I'm speculating, but that's probably not that far from inaccurate. And the cost to operate a large scale domain extension, a registry, comes out to somewhere around $3 to $4 a domain. We just discussed this actually with the Internet Commerce Association, who we had on as a guest last week.
That still seems very high to me for an entry into a database, but yeah.
Well, it's because of the problems that you were just talking about, right? So yes, I mean, it's essentially an entry into a database and then an API call, but ultimately there are decisions that need to be made, and so that requires input and then subsequent output, and there's infrastructure, and there's lawsuits, and there's things that need to be done and paid for.
Yeah.
And so
actually, that's a really good argument for why Bitcoin transactions are much they're cheap, but like you centralize it like you kind of do with ICANN, and it turns out that you still, for a single database entry into an ICANN database, the most efficient is still $3 or $4. That's crazy.
Yeah. Yep.
Yeah.
Yep. So, well, yeah. So, but why? So let's forget about the fraction of a penny domain registrations for a second, right? Because I think that's unrealistic. But even a totally decentralized thing where you limited all the necessary people and the bureaucracy, basically we work out a price that works, so you don't have everybody spamming the shit out of the world, and you've got this fair price, and everybody goes out and they register all the domains, kind of like what they've already done over the last 20 years, and where's the issue, right? Like, so we've got there's no land.
That's perfectly fine. I think the thing about domain names that's very different than Bitcoin is that it's not fungible. You can't trade like business.com for yourstupiddomain.com, right? Like they're not fungible. So they're all very unique, and that's
funny though.
Yeah,
it's funny. So for the most part, you're right. There's a really interesting trend which started in China about 3 years ago, 2014, I'd say it started 4 years ago. And they tried to, and I say try because there's been massive, if you think that Bitcoin's volatile, this shit was crazy. And they basically took all 6number.com strings and 7number.com strings and 5number.com strings, four numbers and 3 numbers and 2 numbers. Those were all gone, and they were highly valuable already. But they've taken all the 6 numbers. It started there, and it moved out to the 7s, and they commoditized them. And so you say, like, what do you do with a 6number.com? 6, 7, 9, 2, 4, whatever. Forget the 4s and the 0s because they were not appreciated in China, and everything else became a commodity, and they were being traded not unlike the way Bitcoin is. And because it was scarce, it was interesting how quickly we saw the market just go up. And it went from, you had the registration fee, and within like a 2-week period, almost all of them got registered. There was this trend. It was this like spur of the moment, like Satoshi, launched Bitcoin, and then it was all of a sudden, it started growing. And within like 2 weeks, I don't even know what that number is. It's if you've got 10 possible digits, and actually make it 8 because the 0 and the 4s were essentially left out, and you take that out to the 6th power. I don't know how many, but it's a big number. That's how many got registered in like 14 days. And the prices went from, okay, as soon as the last one got registered, you had a registration fee of, call it $850. And then it was like within a week, it was $25. Then it was $50. Then it was $75. Then it was $100. And it went all the way up till it kind of peaked at around $350. You had some outliers that went up over $1,000. And then it just came crashing down. And then it went to basically you couldn't give them away. And then it went back up to like $20, $25, then back down to 0. And then it went back up to around $70. And so and now the market is doing this, like where people won't pay you the registration fee, so you'd sell at a loss. And then the market will go right, just above that. So after October, because this all happened in October 2014 or 15. And so that's when renewals happen. So after these things get renewed, now people want their money back. So then suddenly the market starts developing again. And it's a very interesting thing to watch. Not unlike many altcoins and early days of Bitcoin.
It is interesting, and I think I need to get more details from you because I think I can make a talk around this. But the big thing about ICANN is that it's centralized, right? Like, and so only certain people can register. I actually wonder, like there's a transfer fee, right? So like it's not so easy to sell it to another person without some sort of fee. So it actually ends up being a terrible currency because every time you transact, you have to like pay some amount of money.
Well, $7, $8, $9, $10. But
yeah, I mean, it might be a decent store of value if it actually held its value. But as a transactional thing, it might not be that great. And also they're all like kind of equal. There's no like one that's like 10 times as much and known to be 10 times as much. It's like it's just there's just this one kind of bill, so it's not as divisible. Which
that's not true though. So this is what's so interesting is that there's like so 7number.coms being the lowest value, which are basically today 0. 6number.coms, having this sort of baseline that's sort of stabilized, but very, very low. 5number.coms being anything from like $500 to, without getting into the really unique ones that are like repeating or very lucky numbers in China, then, those are, can be several $1,000s. 4number.coms being 20,000 to several $100,000. 3number.coms being several $100,000 to several million. And then 2number.coms being millions and millions of dollars.
But like there's no real like reason why one is. I mean, like you said, there are certain repeating ones that are worth more than others. That makes it very difficult because it's not really fungible. The divisibility isn't quite there.
If you not yet,
you want to pay something in between, like 100. Say 5-letter ones are 100 and 6-letter ones are 10. Then like something in between, like you have to transfer 5 of them, but then that costs you 5 different transactions. So it ends up being a terrible currency for that reason. But it's an interesting study in how those things kind of evolve. And like this is why domain names aren't used as currency right now.
Absolutely. Nor should they ever be. But I do think that it's an interesting study, and I do think that this whole anomaly that popped up in that market was really, I mean, I think you're probably much better studied in market economics than I am, but I am very intrigued, and I read a fair amount, and I have never seen anything like what happened there over the course of that period of time. It was really, really, really interesting to understand the drivers there. Anyways. So,
Sorry, we've been talking on this one question. I think Tess has more, so
it's okay. My next question was, I think, already answered. Jimmy, I read a lot of what you've written. I really respect how much you've said and shared with the community. I know that's the the way that crypto really works is in being so open. And I was going to ask you about this quote of yours: credible long-term scarcity is why people buy Bitcoin. In other words, people want Bitcoins because they see it as a good store of value. And so I think we already really hit that. Besides, if we want to talk about, larger value domains, I mean, Drew here at Media Options primarily sells, 6-7 figure domains, maybe 2-letter. I think Media Options has bought, sold, or brokered more 2-letter .coms than anyone in the world, for example, right? So does it make a difference for a store in discussing store of value and the transactional cost? Does it make a difference when we're talking about a 6 or 7 figure asset versus these, kind of random strings, which I know are really interesting, but aren't as applicable in the real world?
Well, it's about fungibility, like you said.
Okay. So
and the thing about domain names is, somebody has to want to buy it, right? On the other side. Now, if enough people want to buy it, then it becomes this thing where, then you can get sort of like a bidding war going, and so other people want to go get it because they know they can sell it to these other people that really want it. So it's this weird network effect that has to happen on a per domain basis. With Bitcoin, it's because it's completely fungible. What you have is, well, not completely fungible, but it's relatively fungible. What you have is the ability, like if enough people want Bitcoin, you get that network effect of scarcity around Bitcoin itself instead of a particular domain name. So right now, if I have a domain that's I don't know, dog.com or something like that, I'm sure that's a very, very valuable one. I know that lots of other people want dog.com because there's pet food suppliers, there are probably breeders, there are like lots of, I don't know, it might even be like a bad ex-boyfriend site or something, right? Like there's a lot of use cases for dog.com in such a way that I might be willing to say, you know what, it's, somebody's selling it for $1.5 million right now. I'll buy it for $1.5 million, and then, in 5 years, it might be a pretty good investment because all those people that I think will want it still will want it back by then, and they'll be able to pay more of a premium by then because the economy around that stuff will have grown. So that's the idea behind store of value. Here's the thing about centralized stores of value, though. They tend to be a little bit fragile. So, for example, that New York taxi cab medallions were very, very valuable. And they went all the way up to like $2 million on auction, in large part because they were very scarce. Then what happened? Well, Uber came along and they dropped in price like a rock. So a lot of this is what you have to contend with. You are somewhat dependent, not just on the central authority, but the disrupting technology around it. It is possible, although I can't think of one right now, that the DNS system might be overtaken by something that is an order of magnitude better. I can't think of anything like that. Don't make me out to be some person that's like crapping on domain names or something like that.
No, this is why I want you here. This is I want that counter argument. I want, I look forward to the day that somebody tells me like, oh, hey, here's your blind spot. This is what's coming, and your domains are going to be rendered worthless, because at least then I can stop thinking about it and take appropriate actions.
But it's possible something on the order of magnitude better comes along and then replaces it, right? And you could say the same thing about eBay. Nothing has, but it's possible. And something might happen to domain names as well. There are all these like Schelling points in society that are centrally controlled, that it might get to the point where those things get disrupted by something that's much, much better. Now, it hasn't happened to eBay, But it has happened to, New York taxi cab medallions. There were other things that were much more valuable, like say 10 years ago, but has since changed. So you have to think about all of that stuff when you're investing in sort of long-term stores of value. The nice thing about Bitcoin is that it's continuously improving, and there's a Schelling point, and it's decentralized. So unlike eBay, which if you get like a bad CEO, it's entirely possible that company just crashes down because an idiot is running that company. With ICANN, it's possible that like some bureaucrat gets in there that gets a lot of power, and they decide to do really stupid things or have really stupid restrictions on renewals or like whatever, and say, you know what, all of these are invalid as of next October, something like that.
Like open it up to 2,000 new domain extensions, for example.
Yeah. I mean, there's all sorts of idiocy that can happen that could ruin whatever network effect is already there.
Yeah.
But that's a centralized thing. The more I think more dangerous thing is external, right? Like there are constantly entrepreneurs trying to think up new things, and they might come up with something better, and it's entirely possible. So those are
But the same could be said for Bitcoin, of course. And
to some degree. I would say though that it's because of the because it's money, not necessarily like a technological improvement. So, I mean, I think in this way, domains have that have a similar dynamic going for it. It's not necessarily that you get a better technology, right? Like I think .co is faster to type than .com, but people don't go to .co because the Schelling point is at .com, right? Like it's one letter shorter, and it's like got the same letters, but it doesn't matter because there's a Schelling point. There's a social coordination that's already happened around .com.
Yeah. We go back to 1985, and you're like, hey, you can have any domain you want and any domain extension. I'm going to take .co over .com every single time. But today, I couldn't give them to me for the most part.
Yeah, I mean, you could have a .c domain. I don't think people will go to that, right? Like, I think people go to .com instead. And this is the thing about social coordination, is that it's a network effect, and that's very, very strong. And it's like it takes a very long time to overcome that sort of thing. And your tech has to be at least an order of magnitude better. I can't think of an order of magnitude better.
No, how do you do that?
We have right now with DNS. So it's I mean, that said, it's possible. And I mean, if you're an entrepreneur, this the sort of thing that you should be thinking very hard about is how can I make something that's an order of magnitude better than the DNS system that we have right now? And if I can create that, I will be a gajillionaire, right?
Google's been trying for so long. Google would love to replace the DNS system.
Yeah,
but it's hard.
But I mean, you can't just be 10% better. That's not. .co is 33% better, right? Like than .com, but it doesn't matter, right? Like you have to be an order of magnitude better, and that's very, very difficult.
So, switching gears. And sorry, Tess, but like. This is a perfect inflection point for Bitcoin and some of these things that are happening. Bitcoin Cash. I actually I like Roger Ver. I think he's an interesting guy. He's a very intelligent guy, and he's a very good marketer. And I like people who can sell, and so I listen to him. And he makes excellent arguments, but at the end of the day, I find fault in basically most of these things for the reasons that we've just discussed with .com versus .co. It's almost identical. It's like .co, it's faster than .com. It's cheaper than .com. You can. And Bitcoin Cash, it's like, say it's faster, it's it's this, it's that, the other thing, but it doesn't have that immaculate conception that Bitcoin does. Why, I asked this same question to Charlie Shrem, who we interviewed here as well. Why is Bitcoin so unique? Why, like, you have thousands of new altcoins being produced, and all of them have really interesting, not all of them, but let's say a percentage of them have really interesting use cases or new features. And everybody says, Bob, this is better than Bitcoin. And it's like, but, coming back to what I said earlier, it's the barrier to adding that to Bitcoin, relatively speaking, is like zero, right? It's like Jimmy goes and takes this feature off of this altcoin and reprograms it. There's a consensus mechanism. Everybody agrees, and it gets added to Bitcoin. Now, obviously, the reality of that consensus is a much more difficult thing. But in theory, if you had a feature which has been flushed out and it's been proven with time and trials and tribulations, it can be simply added to Bitcoin. In my mind, my uninformed, uneducated mind. And so that's why I've never subscribed to any of these altcoins or Bitcoin Cash, for example, being probably, or Ethereum, one of those two being the closest thing to having even close to the network effect, although it's not really close. Why is Bitcoin so unique? What makes it so unique that, in my mind, it can't be replaced?
Yeah, I think you hit the nail on the head already. But basically, this is not a technological play. A lot of people, especially Silicon Valley investors, think, oh, okay, well, if this is a better mousetrap, then, it's going to win. That's not what it is. It's a social coordination problem. And people like the Schelling point is Bitcoin. And that's where people go first. And you can try to create other Schelling points, and that's what a lot of altcoins spend all their money on, is marketing and getting people to know about it. And this is, I'm sure this is true of domain TLDs, right?
Totally.
They market the hell out of their TLD to try to get people to do it. And those two are a lot more similar than this is a better mousetrap kind of mentality that a lot of tech people that are looking at it from a purely technological perspective are doing. Money is very much a social coordination problem, and Bitcoin is money. That's what it is. And a lot of people
money,
are. Well, what's that?
Is it money?
Yeah, absolutely. Yeah, it's money. That's what it was designed for. The ideal properties of money are fungibility, securability, divisibility, recognizability. All of those things are very obvious with Bitcoin. And stability. Have in one of my talks, but this is the point, though, right? It's about social coordination, and a lot of people are mistakenly thinking that it's about the technology. There's definitely a technological component to it, but it's not the dominant thing. The dominant thing are the monetary properties. Kind of like with domains, it's not about the entry in the DNS database that points to a particular IP and making that better or something like that. I could make a new domain name, domain TLD that runs faster, that gets queries faster, whatever. It's probably not going to matter, right? It's not about that at all. It's about
not about that at all.
Yep. It's about, and it's that level of disconnect in a lot of people, making these arguments about, okay, well, we have 32 megabyte blocks, therefore we're better. No, you're not. You're not better. and it's they're using a very small fraction of that, by the way, Bitcoin caches. So stuff like that is just is kind of ridiculous to me.
So I feel like, Jimmy, as you're saying social coordination, and I understand what you mean by that, Drew, that makes me think of you often say, we need to make the pie bigger. I think that both of you are in these new emerging spaces where a lot of potential investors don't understand the value or how to utilize I don't know if you can call it a commodity or the asset, right? So I think it's interesting, Jimmy, that you primarily, well, I don't know if you would say primarily, but that I think your biggest project right now is programming blockchain and being an educator, educating in others in how to program that. I'm just wondering, what's your underlying value there? Is that for social coordination? Is that your goal?
Well, I mean, my goal is to bring sound money to the world, because right now we have fiat money that gets depreciated every day. Every time they raise the debt ceiling or sell more treasuries that get bought back by the central bank, you're essentially printing money, and it dilutes every dollar that you have, right? Like anything that you have in your bank account, it gets diluted at will by the will of the U.S. government. And every yen that you have gets diluted by the central bank of Japan, right? Like that's not sound money. It's easy money. It's money that gets printed. It's basically a bunch of people that are stealing money from you through inflation. And I think that's horrible for society. And I want sound money to exist, and that Bitcoin is sound money. It's hard money. It's the hardest money that we've ever had. And that in itself is a very good thing. But as far as like my training new developers, I'm doing that because I want Bitcoin to succeed. And in order to succeed, the biggest risk is that we don't have enough developers. And there was a point in time where I was like, okay, I can probably contribute to Bitcoin Core and do like 50 commits a year, and that would be very productive as a core dev. But then I realized, I do have, some skills in teaching. If I utilize that instead, and I've trained somewhere north of 400 people so far in the last year and 2 months, or last 14 months or something like that, I can come out ahead if only like 1 out of 8 of them like do a commit a year, right? Like, so for me, it's a way to scale myself. And it's a way to scale that knowledge and to get that out there so people can really contribute and care about this stuff as much as I do, and get to the point where we really can have sound money that's separated from the state, where we can limit like the evils of the state. Every war has been funded by deficit spending. Every entitlement has been funded by deficit spending. Every corporate welfare program has been funded by deficit spending. If you take away a lot of that stuff, it becomes a much more fair and just world where people are not oppressing each other. So that's my ultimate goal. I want sound money to exist, and I've said this before. Scarce money causes an abundance mentality. Abundant money causes a scarcity mentality. And right now, I think most of civilization is in a scarcity mentality where they're trying to figure out how to get their piece of the pie. When you have scarce money, when you have hard money, when you have something like Bitcoin, what ends up happening is that people build instead, and they contribute to civilization, contribute to society. It's how Rome was built. It's how the U.S. went from a backwater British colony to a world superpower in 100 years. So I believe Bitcoin is the path to get there, and that's where I want civilization to be. That's why I do that.
I'd love to go down that rabbit hole further. I could talk about it for hours because it's so intriguing to me. But I won't. I will spare you that.
I'm wondering, Jimmy, we talked to Charlie, talking to you, both of you have degrees in mathematics, which have very little to do with changing the world. And yet both of you seem so...
contraire.
Oh, well,
mathematics is the underlying everything of the world.
That's what I'm starting to realize here. And yet I'm also thinking you didn't learn this in college, right?
No, I didn't.
The concepts that I'm hearing about society, economies, like how did you get this education? I take it it's self-education. I imagine that the conversations between the top level crypto minds like yourself are about these types of things and sharing. I hear theories that I've never heard of before. Where do you guys just read books and talk to each other? Where do you recommend someone who really wants to understand more than just like, how can I invest in Bitcoin and go from 26 cents to a millionaire? Where do you start? What are your like top 3 resources that you'd recommend?
Well, so, what you said is exactly correct. Like a lot of people get into Bitcoin because they think they're going to get rich, right? And they're like, okay, well, I'll buy it for a small amount and then I get rich and then whatever. And then they start digging down that rabbit hole. And oh my goodness, there are a lot of rabbit holes to go down. You start learning about nutrition, you start learning about civilization, how politics works, how like money works, and how fiat money works in particular, how, government and big business are like completely in bed with each other to like basically sell you on a lot of stuff to get you to consume lots of stuff. There are a lot of rabbit holes to go down. And if you look for them, they're there. I'll tell you how I got into it. I got into it after 2008, after all of the stuff that happened around then. And I was like, wait, did they say $700 billion? Where did that come from? Right? Like they didn't have a special tax or anything. Where did that money come from? And like just asking some basic questions like that, right? Like, where did $700 billion come from to bail out these banks, right?
And you're talking about the bailout money, the money that did.
Yeah. It's like $700 billion, right?
Out of business.
Yeah, I mean, I was living in Boston at the time, and I still remember, like, in the years before 2008, we had like this big dig, right? And this was
I know all about the big dig.
Yeah, huge infrastructure project. It was supposed to be a couple $1 billion. It ended up being 20 billion. And I remember thinking, like when
like a decade longer than
talk about it, like $20 billion, and you can thank the feds for providing us with that funds. It's like, oh man, what a waste of taxpayer resources. And then 2008 came, and we're like completely like desensitized to $20 billion because like, $700 billion. Where the hell did that money go? So, like just reading on that and then like trying to figure out what happened, where did that money come from, led me down a rabbit hole where I got into a lot more like libertarianism, right? Like, and this is where you read a lot about Austrian economics, Mises, Mises.org, very good.
MISES.org.
Yeah. And you read about all this stuff and you're like, wait, that's how money works? I had no idea. 30 years of my life, I had no idea that they just print money whenever they feel like it, right? Like it's just like, and they've obscured it under like multiple layers of stuff, right? The treasury like prints money for the central bank, and they lend money back and buy back treasuries, and then there's like all of these other central banks that are using US dollars as reserves, and it like they make it as obfuscated as possible so you have no idea that they're just taking money from you. And that's all it really comes down to. They fund it through inflation. And it's it's
so
like learning about that makes me so angry.
Flush out that point, and I agree with you 100%. It's absurd. But I think unfortunately most people and it's not even their fault. The world, the society doesn't provide for these types of education.
No, our education system purposefully makes sure you don't understand it.
Exactly, on purpose. So, but I think people don't understand just the very simple concept of like, what does that mean? So the government prints money. By printing money, they're robbing money from you. People go, well, my savings account says I have $30,000 in it. And after the government printed $700 billion, it still said I had $30,000 in it, assuming you didn't lose it. And so what do you mean they stole money from me, right? And So, but most people, they believe, they don't understand, and so they say,
and they can't do basic math. They're only paying attention to the numerator and not the denominator. It's so stupid, right? It's like it's like a startup giving you like you get 10,000 shares. Well, how many shares are there? We don't really actually know, right? Like it's like okay, if there's a big difference between having 10,000 shares of a company with like 100,000 shares and 1 billion shares. There's a giant difference.
Yeah.
And that denominator actually matters. And a lot of people ignore the denominator and only look at the numerator. And this is one of the ways in which they desensitized you to everything.
But that's what I wanted to flesh out is what is the denominator here, right? So the $30,000 in your bank account is the numerator, and the denominator is how much total money supply is there. And so if you've got, let's just use simple numbers here. If you've got $1 trillion, as if that's a simple number, but you've got $1 trillion as a denominator, as the total money supply, and you own $30,000 of that denominator. And so you're $30,000 over $1 trillion. You represent 0.00000, a whole lot of zeros, 3 of the total money supply. Now, suddenly, world goes to hell in a handbasket. Government says we're going to print another $1 trillion. Not that far off from the 700 billion they actually printed. So now you've got $30,000 over $2 trillion. So you used to have 0.0000003 of the total money supply. That was like, it's like if you own 1,000 shares of Apple, you're like 0.0000000 whatever. Okay. So now you used to be 0.000 whatever 3. Now you're 0.00015, right? Because you got cut in half. There used to be a $1 trillion supply. Now there's a $2 trillion supply. You've still only got 30,000. So you've only got basically half the value of the total supply that you used to have. And people don't get that concept. Now, to take it out one step further, when they print $1 trillion, it doesn't matter. It doesn't like immaculately just get flushed out through the world economy. So it goes into pockets, and that's what creates bubbles. Okay. And so like the way they're stealing money from you is it's not as easy just to say, well, they printed $1 trillion and like it went to the banks and now like, your money's worth less, and it is, but probably only worth like a little bit less. Even if they doubled the money supply, your money's still only worth like probably a little bit less. Most of that money went to the banks, and so it went into like the CEO of that bank got super, super rich. Even if he got fired, he got some $50 million, $100 million bonus, golden parachute out the door. Boom. Okay, so some of that money supply went to him. He went to Florida. He bought a house. He bought a boat. Kind of drove up the market for those products, along with all the other bankers. Okay. Then the bank sat on that money. And they didn't want to lend it because they were scared.
Well, no. They lend it to big businesses at almost a 0% interest rate. So the big businesses get the benefit. And this is something in economics called the Cantillian Effect, which is that the early spenders of newly printed money get all of the benefit, right?
Exactly.
So if you're the sucker at the back end, right, like like some guy that's like just the normal guy that gets paid or whatever, your salary's not
every single person.
Yeah, every single person except the elite, right? Big government, big business, bankers, they're the ones that benefit, right? And this causes a wealth disparity for every dollar that gets printed.
Yes.
Is that the rich get richer because they have early access to that newly printed money.
Exactly.
All of us that are like normal people, no, they're stealing. Basically, those people are stealing from us. It's a wealth distribution scheme. They just don't talk about it that way.
And so this is the thing. The only way to fight in the current system, the way that it works, the only way to like keep up, because you're swimming upstream, you're swimming against the current. There's this current of money flowing into society in the form of that $700 billion bailout package. And so it's getting distributed slowly through the economy, starting at the top. and then gradually works its way down, but it has much less power by the time it gets down to the bottom. And so you're swimming against that current of new money. And the only way to keep up is to participate. So that means borrow money to buy productive assets to and if you're not doing that, then you are falling behind. There's no question about it, right? So there's no argument, there's no discussion about it. It's like all this new money came into the system, your money is now worth less. And if you're not using that new money in order to buy important assets or business.
Well, this is what store of value exactly is, right?
Exactly,
you want to store value against this tide of inflation that's coming. And the thing is,
explain that to people, nobody, it doesn't click, right? Like I try to explain to my parents and they're like, what are you talking about? Like,
I mean, the easiest way for me to explain it is like, if you go shop at Costco, right? I've been shopping at Costco for 20 years or whatever. Just think about like even 10 years ago, right? I used to buy milk at Costco. It was like, $1.95. Right now, what is it at Costco? It's like $3.95. What happened there? What happened? Yeah. Why is milk like double the price in 10 years? The government tells me the indicator is like 1 or 2% every year. If you compound that over 10 years, it should only be like 15%. Instead, it's more like 100%. So what the hell happened? And if you actually look in terms of money supply, they print an additional 6 or 7% of the money supply every single year. And that's a closer approximation of the actual inflation. And if you compound that over 10 years, that gets much closer to the doubling 100%. Of actual consumer prices that you've seen. And this is for almost everything at Costco. Salmon used to be like frozen salmon used to be like, $17.99 a pound or something like that. Now it's like $35 a pound. It's like, what the hell happened?
But where does it actually come from, right? It comes from servicing debt. The cost of creating that inflation, the way that these prices slowly step up is because companies have to service debt in order to maintain growth, and more debt, more expensive debt.
So Jimmy, what's your favorite 1 or 2 places that you go, book, website, other, Twitter, for economics?
Okay, so I would say go read Hazlitt's Economics in One Lesson. That's a very good book, very simple, and sort of explains it to you in very layman's terms, everything that's going on. There's another book that I really like, which I think makes the moral case against easy money and for hard money, which I also really like. You can download this for free on Mises.org, but it's called The Ethics of Money Production. And it's a fairly extensive book, and being a Christian and everything, that for me laid out the case very, very clearly why you should not have fiat money. And what people 1,000 years ago did to make sure that it wasn't easy money, and the gold standard and everything else. So those 2 are fantastic books. There are other books that come from a more Austrian perspective that I think are really good. I would say go to Mises.org if you're interested in any particular topic and do a search. They have tons of free books that you can download for your Kindle and just read, right? Like it's great.
Thanks, Jimmy. You mentioned fragility a few times, and right before we started recording, you mentioned a book you like on that. Was that Antifragile by Nassim Nicholas?
Nassim Taleb. Yeah, I like that book. If you want to read specifically on Bitcoin, there's a really good book by Safety Anamis, The Bitcoin Standard, that I really like. And he goes through a lot of the economics of Bitcoin as well. And it's a very entertaining read because he knows his history of economics. So he goes through like different monetary mediums that we used to have, right? Like glass beads in Africa, wampums in North America, and like rye stones in I forget, some Polynesian island or something like that. And why they were effective for a time, and then as soon as certain people came in and that could produce it at really easily, then it instantly changes those economies very, very quick. So Very, very good book. And he talks about how, like, if you like, whenever you have two monies and one money is harder than the other, the hard money will always win. And
pushes
and
out
this, the bad money. And this is what I expect to happen with a lot of this stuff as well. So, those are good books to read.
Yeah.
Tying this back, taking that point of the good money will push out the bad money, and tying that back to domain names, since and believe me, I would love to go on the economics rant for the next 2.5 hours and educate people about money, because I think it's probably way more valuable for them than talking about domain names. But we are on DomainSherpa, and I want to appease my audience who gets sometimes upset when we are talking about other subjects too much.
Yeah, well, and there's a lot of places you can go and listen to Jimmy or hear about Bitcoin, but there are not a lot of places where you can tie it in with domain names, and they do have so much in common. I think it's really, valuable to hit that.
Well, it's a good store of value. That's the key thing that I think I'm getting out of the conversation, is that domain names, as long as that central party doesn't act crazy, it's actually a pretty good store of value, right? Like, and this is the thing that people look for in a fiat economy, is that because their dollars are constantly depreciating, you need something to store value in. Now, the thing about like almost any asset other than, the dollar, is that they tend to fluctuate in price. And I'm sure you've seen this throughout, right? Like, but over a long enough period of time, as long as there's real scarcity, it tends to go up. And this is true of Bitcoin. This is true of domain names. This is true of real estate, right? They say, like, invest in they're not making any more land. So you're like, there's a scarce supply. So there's always
the only variable is time. Supply is fixed. Demand we know is increasing as long as the population's increasing. And, more
as long as this remains a Schelling point for internet stuff, this has very good potential. Now, like, this is one of the things that really annoys me about fiat money, is that people have to find other stores of value, and asset that tends to cause some degree of asset inflation, like with stocks or whatever. Because people can't keep it in dollars, they have to invest, right? Like, before, the Fed came along in 1915, they're like investment professionals, right? People that help you diversify your investments. Like, that didn't really exist that much. I mean, there were some people that were doing it, I'm sure, but like, that's become a thing because people can't keep it in dollars, right? Because the dollar is a terrible store of value, and at best you're going to get like 0.5% from your bank in a savings CD that you have to keep locked up for 2 years or something ridiculous, right? Like, it's a terrible store of value. So what people end up having to do is like buy a lot of this other stuff, which tends to cause bubbles and like fluctuations and all of this other stuff. A lot of people,
like we said, if you're not buying, if you're not participating in that economy, that, okay, you need to invest more, you need to buy productive assets, because if you're not, then you're always falling behind. They've basically created an environment where if you don't participate, you can't be passive anymore. It's not possible. You will be poor and on the street if you don't participate.
You'll just lose money every year.
Yeah, exactly. You're going to end up poor and on the street.
Because the denominator keeps growing while your numerator stays the same at best.
Yet, let's talk about domain practices in the crypto industry, because it sounds like everything you just said applies here, and that's weird for an industry who gets it so much. On the one hand, most crypto companies are adopting, the .io,
it's because they can't afford the other ones. That's why.
And yet there's that. Go ahead, Drew.
That was the tie-in I was trying to make. We were talking about how good money pushes out bad money, and it's a very interesting trend that I see is what Tess was just saying, is that all these new crypto companies are buying the .io, and then they launch, they do their ICO, and 90% disappear with the money or spend it on marketing. But the ones that do survive, the ones that become I don't even want to say viable projects, but the ones that make a go at it, they tend to move to the .com and Shapeshift, for example, or there was another big one.
Blockchain.info became
blockchain.info, perfect example. There's been quite a few. I mean,
it's because they don't have the money, and it's like a placeholder until they have enough money, then they'll go buy it. That's basically.
Is it same concept, right? Good money pushing out bad, good domains pushing out the bad.
Yeah.
If you give the time, if the time frame is wide enough, the good money will push out the bad. The good domains will push out the bad. And I think that's a very similar thing that we're seeing.
Did you?
Nah, I don't know. I mean, it confounds me that crypto is all about addressing, the inherent lack of trust in the centralized options, because there's so much sensitivity in the data. I mean, we see .com owners regularly receiving emails intended for even enormous organizations that don't use .com. I know .com owners who are getting people's driver's license, HIPAA statements, all sorts of sensitive data, not just from a user who forgot that you're at jimmy.net, not jimmy.com, but even frequently from people inside their own company can't remember that they don't own the .com because they're a huge corporation or whatever. And we call that email bleeding. And yet, we see crypto companies who seem so aware of the social constructs and what to look out for, but they're using .o, setting themselves up in that same situation that the whole idea of crypto is trying to address. So, I mean, does that affect your trust in them? Does that affect, or do you think just you gotta let something slide to build this?
Yeah, I mean, if you're a centralized service, I think it's you pretty much have to have the .com domain eventually. I think for a lot of these companies, they can't afford it because their names are like too popular or whatever, or it's only 4 letters or something like that. It's just not going to work. That said, a lot of these ICOs and things, I mean, they're all pretty much pure marketing.
Money grab.
Yeah. So like they have a specific audience. They don't intend to last a very long time. So I don't think they want to invest in a .com because they just want people to like buy their stuff and get out of there. Why invest $2 million into a domain and then
when you can buy Lambo?
Like 6 months, yeah, like when like you'll get like 80% of the same traffic with a .io domain or whatever, and then be 2 years later, like nobody remembers who you are. So yeah, like they're not really building for the long term. Let's just say that.
Yeah,
that's probably
okay. So it's a statement about the company, maybe is fair to say.
Probably.
Okay.
Yeah.
I don't know if you've heard of contrib.com. We previously interviewed Chad Folkening, who's created Contrib. He, in domain names, was one of the earliest investors in domain names. And interestingly enough, he was actually buying domains around blockchain and cryptocurrency in the mid-90s, before anyone was even talking about this stuff. So Contrib now is Chad's project to create decentralized organizations which are domain name centric. Do you, I don't know if you've heard of that project or if you want to talk about the viability of that kind of structure as new companies are created?
Well, I mean, I'm skeptical of almost anything like that says we're going to make a decentralized X. Almost all of them I've noticed are centralized, so you can't be both centralized and decentralized at the same time. So it doesn't really make any sense to me. I mean, it's possible that they have something new if they have certain domains that might make sense to do something interesting. Then maybe, but I don't know. Like I get very, very skeptical. I've seen a lot of decks. I've seen a lot of ICOs. I've seen a lot of projects, and almost all of them end up being just like a central company. And then at some point someone says, why are we using a blockchain? And
Interesting.
need to. Yeah. So yeah, I don't know. Like a lot of these projects, yeah, like people ask me about specific ones. Like, okay, I haven't heard of that one, but here's my general rule of thumb. If it's centralized, if someone's issuing a token, if somebody is in charge, it's by definition centralized. And to go from centralized to decentralized is a very, very hard road. Mm-hmm. And in fact, the only one that's done that is Bitcoin, and that's because Satoshi disappeared. And and there aren't many projects like that. So
no.
Yeah, absolutely. What do you think are, say, the top 3 most exciting projects that you're seeing in the crypto industry today?
I'd say Lightning is a big one, and some sidechains projects. I think Liquid and Drive Chains are 2 of the bigger ones. And this push towards more privacy on chain, and this includes a whole host of stuff like Mast, Graphroot, Taproot, maybe even Simplicity, and other things that are coming as part of SegWit version 1, maybe 2. These are all improvements to Bitcoin that give it more utility, more security, more fungibility, stuff like that. So I'm excited for all of those.
Very cool. Thanks.
One of the things that interests me is, so from a VC perspective, right? So you're working with or you're a partner in blockchain capital. How do you a project like Lightning, for example, or Drive Chain, like where's the upside of supporting that project other than increasing the value of the underlying asset?
Yeah, I mean, there may be like businesses that come out of it. If you make like a watchtower business or something like that, and take some small fee for, making sure that neither party cheats or something like that, that could be a viable business. So, I mean, as a VC, what you want to do is be around the people that are doing the innovation, because they might be creating companies. And this very true of people like Mark Andreessen. He was working on the Mosaic browser, and then he was like, you know what, I think I can make a browser that's private that people buy, and he went and founded Netscape. Those are the people you just kind of want to be around anyway. So supporting projects like that is a pretty good return on investment in general.
Thanks. Good feedback.
But ultimately, it does come down to just being at the epicenter, making sure that the right things are being done to support the overall ecosystem and drive the value of the underlying asset.
Yes, absolutely.
What's your overall sentiment on the market right now? We're going to air this in a couple weeks, but we're filming October 23rd. Short to midterm, bullish, bearish. What do you think, Jimmy?
Well, long term, I'm almost always bullish on this stuff. Like I said, before, as a store of value, the fluctuations will happen because it's not a peg currency, and demand goes up and down. But over the long term, because of its scarcity, I think it'll go up. I mean, I'm prepared for like another year or 2 of a bear market, but I'm also very happy if things turn around sooner than that. And this is how any holder should really think about stuff and I'm sure this is the same with like domain names. You just sort of have to hold until somebody really wants it from you, and then you could sell them, right?
Domain investors make great holders.
You have to be willing to be patient on this stuff. If you're not patient, you're probably going to have a pretty bad time.
Thanks. Well, Jimmy, I'm so grateful for your time here. You want to tell us any projects you're involved with right now? Any shout outs on your end before you leave Austin tomorrow? Anything going on?
Yeah, so I mean, I have my programming blockchain seminar. I have one coming up in Austin in mid-November. I have 2 in Australia in early December. I have one in Las Vegas in January. I'll probably have one in February in London. But yeah, I mean, if you are a programmer, know Python, I can teach you a lot of what you need to know in order to be a Bitcoin developer, and know a lot about like the blockchain aspect of Bitcoin. So that's what my website is, programmingblockchain.com. And that's something that hopefully you guys can appreciate if you have any programmers on your podcast.
A lot. I think a lot of the people are at least entry level or better. A lot of people are some degree of programmers.
Mm-hmm.
Yeah, and I think highly driven, highly motivated to learn too. So that's exciting. Jimmy, it was fun to meet you. Interesting to see you get real excited. I wish that we could talk all day about these rabbit holes. I feel like I need to go get an education on all of this. I would love to have you back on in 6 months to a year, hear what's going on with your, I feel like you're like a Bitcoin evangelist.
For sure.
But much more than that, really a change for the world. So good for you. Hats off to you. Can I say that?
Yeah, no, just wait until you hear about all the nutrition stuff. Like.
So are you subscribing to this Bitcoin maximalist meat?
I am totally into carnivory, and I gotta tell you, that's like a huge rabbit hole that I could spend hours on, and like between like what you eat and how often you eat changes your lifestyle completely. I've had videos on this stuff, but I've cut out like a ton of stuff. Like once you sort of unplug from the matrix, you realize just how much stuff you're dependent on. Like I stopped watching the news, I stopped following sports, I stopped watching movies, TV, just lots of stuff that I realized was really a part of that giant monster apparatus of big government and big business that's trying to influence you into doing things that they want you to do. Once you unplug from that, you can see a lot clearer what's going on in the world. And
I haven't had a television in 11 years. I despise politics. I despise the news. I think it's all bullshit. I don't. I just
it's amazing how little you need to know. It doesn't affect my day-to-day life at all. It's people get so passionate about Trump's doing this or those stupid Democrats or something, and it's like I don't.
Might as well be Roseanne Barr. I don't care.
You're not going to remember this next week. No. Like you don't really care.
Well, and I think some people think they can't affect change if they don't know what's going on with other people. But what I really have been encountering, the more I encounter thought leaders in the crypto space, the more that I see change can be affected. And this is much more an action than a reaction. A reaction is, I literally see people picketing against Trump like once a month at the certain spot in downtown Phoenix. And I'm like, really? 20 people? Aren't you hot? Like, what change are you going to affect? And yet, by not listening to the news at all, not having a consumptionist mentality, you are affecting global change.
Yep.
And that is powerful and exciting and
very stoic. Yeah. Like it's very much of that philosophical school, which is control what you can control and don't worry about anything else.
Exactly.
And that to me is such a liberating thing because you don't need to know about a lot of stuff because first of all, you can't control it, right? Like a lot of this stuff, you just have to understand, like, despite what the government tells you that your vote counts and that you need to go vote and do all this voting, as if like that actually controls anything. What you can control is far more than that. And people have way more influence than they think if they are not consuming, if they are instead producing. And that's been a big change in my life over the past year and a half, is that I've gone from a consumer to a producer, and it's a lot more fulfilling that way. Life's a lot better, and you're starting to realize your own purpose a little bit more, and you're actualizing a lot of that potential that might be latent. So for me, it's that journey is something that I hope for everybody. It's a lot easier to get there if you get into Bitcoin first, though.
So I can't help myself. I truly, I'm clearly not an expert on Bitcoin or cryptocurrency, but I have a passion for it. And so I'm, high level, decent understanding. And I subscribe to people like you because I think that your arguments are the soundest. And so it leads me to believing that, I guess by current subscriptions, I'd subscribe as a Bitcoin maximalist.
Well, then
I gotta say, this whole thing with the meat thing, like my wife is a nutritionist, and she's like the healthiest person you've ever met in your life. She's like, it's like annoying. And I'm not vegan, but she is. And I try to eat very healthy. We're extremely, let's say, conscious about what we eat and where it's coming from. We eat virtually no packaged foods or processed foods. We make,
that's a very good start.
I probably have honestly, I probably have $60,000 in kitchen equipment in my house because my wife makes everything. Like she makes all the shit that you normally buy, she makes it. And I just don't get the meat thing. Like I actually like to eat meat on occasion, and I do, and my wife gets upset with me. But I actually don't feel good after I eat a lot of meat. And so I don't get it. I don't get the meat thing.
All right. Let's get into this because this stuff is important to me. All right. So I used to be a vegetarian. I was for about 20 years. Okay. I stopped almost 6 years ago. And the arguments that I found for being more paleo at the time were very convincing, which is basically our biology is a certain way, right? We have a particular way in which we process food and certain things. Yep. So our bodies have no idea what to do with sugar, for example. It's an invention from prominence maybe 300 years ago.
Absolutely, worst thing that we consume.
Yeah, and it's horrible for you. And nobody
really basically zero sugar.
Yeah. So sugar, processed foods, preservatives, artificial ingredients. Our bodies have no idea what they're doing with that.
Totally. They get stored in fat cells. They cause havoc. It's a mess.
Yeah. So you and I are probably in complete agreement on that regard. Yes. I don't think very many people would argue you should be eating some weird preservative that's in this thing that they just invented last week, right? That's stupid. Yeah. What our ancestors ate, if you eat that, well, our bodies are tuned to that, right? Like you're part of an evolutionary history of your ancestors who survived all this stuff, and if they weren't able to eat, the stuff that your ancestors ate, then they got weeded out of the gene pool. That's just how it worked. Yeah. So if you got stomach pains every time you ate steak or something like that, you probably did not survive. So the people that were selected for were the ones that knew how to process meat or whatever. The thing that a lot of people don't realize is that farming is fairly new. So about 20,000 years ago, people started farming. Before that, we really didn't eat that much in vegetables or fruit. And the little bit of vegetables and fruit that we ate is very different than the vegetables and fruit that you eat today.
That's a fact.
For example,
primarily apples, grains, though. Primarily grains.
Well, no, not just grains, but look at a fruit. You go into the wild and look at a normal apple tree. Yeah. How big is an apple? It's this small. Big. Okay, it is tiny, and somehow the seeds are the same size, right? The same size as a giant one. So what happened there? Well, it turns out that farmers bred them to be bigger and bigger, to have more flesh, to have more calories, to have more sugar. So in a sense, a lot of the farmers for the past 20,000 years, they've acted as the Monsanto of now, right? They've genetically modified a lot of stuff so that it gets pulpier, fleshier. You look at even something like a watermelon from 500 years ago. They have Renaissance paintings of watermelons.
Yeah.
And you're like, wait, that's the inside of a watermelon? The outside looks exactly the same. And then you look at the inside, it's like mostly white stuff, right? And it's like a little splotches of red, and that's the part you're supposed to eat. What happened? Well, farmers genetically modified watermelons so that it would be mostly flesh, even like from 20 years ago, right? Like think about watermelons 20 years ago. It was like
selection isn't
black
that
seeds,
different,
right? It was mostly black seeds. Nowadays, you get most watermelons, they're seedless. In 20 years, they progressed the genetics of watermelons so that you don't have to even eat the seeds. Like this is the amount of like genetic engineering that's been going on with fruits and vegetables.
But that selection has happened on the humans as well.
Yeah, well. So let me finish. So you look at something like carrots, right? Like something a vegetable that people think is healthy. Well, you look at a carrot in the wild. The carrot in the wild is purple and white. A carrot that's domesticated is orange. You know who made it orange? It was the Dutch. The Dutch made it orange. Okay, because they have an obsession with the color orange. They wanted it to be like a national thing. They made it orange. Okay, do you think they were thinking about nutrition when they were breeding carrots to be orange? No, they were not. So a lot of the stuff that you're eating in the grocery store, a lot of the fruits and vegetables that you know, like kale didn't exist 10,000 years ago, right? It's a fairly new thing. Broccolini didn't exist like maybe even 100 years ago, right? Like that was like a product of something that somebody came up with. Our bodies don't know how to process fiber. That's why it goes straight through you and out your other end, and why you're so regular when you eat fiber. It's you have to be a cow to process fiber, and cows have 4 stomachs and swallow things and eat 18 hours a day. That's not what human bodies are good at. 20,000 years of adaptation just isn't enough to change your body that much.
Yeah.
And really, before that, most of the calories that humans ate came from meat. So if really when I say
you can't ignore the fact that what you're saying applies entirely, if not even more, to the protein industry. Okay, so
that's true. So they've been bred to be fatter. Chickens, like they're bred to have much larger breasts and stuff like that. And that's absolutely true.
So most people all understand that, right? So,
the genetic cycle of these animals are way longer than fruits or vegetables. You can do like 2 batches of a particular vegetable every year. So you get like many more generations out of vegetables and fruit.
3 batches of dogs.
Yeah. Well, so I mean, you look at something like a bison, which is a wild cow, more or less.
Yeah.
The cow, genetically, they're not that different. But you look at an apple today in a grocery store, that is very different than an apple in the wild. And it's largely like it's bred to be sweeter, right? It was the candy of the Middle Ages, right? Like you gave kids like something super sweet.
So I want to just summarize. Hold on. Up to this point, I just want to summarize 2 things. One is, up to this point, your argument about all the bad things regarding fruits and vegetables are primarily, or what I'm taking out of it is primarily focused on sugar, and that we're in totally.
Well, not just sugar, but there's a lot of other ingredients as a part of that, like farming. That get in there that we don't really understand yet, right? Like you would not eat like a preservative that they invented yesterday. In fact, you probably shouldn't even eat something that was invented 10 years ago. A lot of the genetic modifications that have happened to fruits and vegetables over the last 10,000 years, our bodies just don't know how to handle. So like there's stuff in spinach, like if you eat too much of it, it will just literally poison you, right? Like and a lot of like what you call antioxidants, they're actually your body like pushing against a lot of stuff that it considers like a foreign body. It's a way of making your body a little more anti-fragile, things like that. But as far as fruits and vegetables, there are all sorts of undiagnosed allergies or like stuff. Allergies are really saying your body just doesn't know how to handle this stuff,
Yeah,
right?
totally.
Like, people are discovering this with gluten. I'm sure in the next 10 years, there will be like all sorts of other chemicals or things that are in this stuff that we're like, oh man, we had no idea that this was what, like, this is why I've been tired so often, or this is why I can't, like, you know, walk without knee pain or whatever.
Yeah.
There's a lot of stuff like that in vegetables and stuff that, you know, like that have been put in them over the last 10,000 years. This is not what our ancestors ate. So when I say carnivory, it's not necessarily that I love meat, although I do. It is about the elimination of almost everything else. I started with the elimination of, you know, chemicals and processed foods and like preservatives and stuff like that. That takes you to paleo. And then I eliminated fruits because I knew that they were bred to be sweet, and they have been for the last 10,000 years. And then I eliminated vegetables because they too have that similar dynamic. And then what are you left with? Well, you're left with meat. You're left with dairy products and things like that. That's more or less what carnivory is.
But so dairy, I mean, the evidence that dairy is bad for us is overwhelming.
Well, it depends. So it depends, right? Like, so lactose is very bad for you if you're not of like Northern European origin.
Oh, but the hormones are even worse. Forget about the lactose. Like, yeah, sure, you're gonna fart a lot, great. But like the hormones, I mean, those hormones are causing cellular growth at an exponential level to what our human cells are meant to grow at.
That's a lot of what they inject in the cows, right? So like the more natural,
even a natural cow, a totally uninjected cow. Okay, forget about the antibiotics. Forget about the lactose. Forget about all those other arguments, which are a bit more obvious. It's take a cow hormone. Okay, so a mother cow feeds a baby cow. Baby cow drinks the milk. It's getting hormones, which cause cell growth, which is why you get a baby cow that might weigh, I don't know, what does a baby cow weigh? 30 kilos? And then suddenly, a year later, that baby cow is like 100 kilos and or 150 kilos. And it's because the cellular growth is happening exponentially faster than, say, a baby that's like 3 kilos. And then a year later, it's like 5 kilos or 7 kilos, you know, because the cell growth is a fraction of what it is in a cow. And that's all driven by hormones. And so, like, when you give me cow hormones as a non-baby, okay, it becomes much worse later in life, especially like above a certain age, maybe 30, 35, 40. Suddenly, okay, now I get all those hormones, and the cells which are reproducing are like those precancerous cells, those cells which are really, really bad, that cause really bad things in my body, are reproducing at exponentially faster than they should because I'm taking cow hormones.
Well, so I haven't studied that aspect of it, but I usually the dairy
That's the
product
primary argument from my perspective against dairy.
Lacking the lactose because it's more like cheese and stuff like that.
Yeah.
Which basically the bacteria eat all of the cheese or the lactose because that's the sweet stuff, and then you're left with everything else. That's usually what
you call cheese. If you call it, if you're talking about unpasteurized actual cheese, the way it's meant to be made.
Yeah. Yes. There are carnivores that don't do dairy either, in which they're more or less eating steak. But here's the thing, like, going on that lifestyle, what you actually end up feeding yourself is a lot more protein, a lot more fat, a lot less carbs, almost zero carbs actually, if you do that. And it causes like all sorts of physiological change. So I've slept a lot better. I have a lot more energy, and I feel like crap if I don't get stuff done during the day. Yeah. And these are all sort of things that I never really had before when I was eating a lot of this other stuff. So the proof is in the pudding. Just give it a shot if you're curious and see how you feel. Like, one meal isn't going to do it, right? Like, if you eat steak one time and you go, okay, well, I feel terrible. Of course. This is the sort of thing you have to do for 3-4 weeks before you see any sort of results. Yeah. You might not like it, in which case, great. But there are lots of people that have all of these health ailments that are like, oh my God, a lot of that went away. Maybe it was some sort of like undiagnosed allergy to particular foods. And then they slowly maybe try to add something back, and try to figure out what it is, because our bodies are pretty complicated, and there are lots of things that we just simply do not understand very well. So if you stick with what your body, what your ancestors like kind of ate, it's probably gonna function a lot better than all of like eating a Twinkie or something, right? Like it's like.
So that's a bit of an extreme argument. So I just want to say one more thing. You can comment on that. Probably wrap this up, but I believe, that because have you read the book Eat Right for Your Type?
Is that a blood type book or something like that? Okay, yeah. I've heard of it, but I haven't read it.
I've read primarily because of my wife. More, like probably as much as you've read about economics, I've read about various types of nutrition, and I don't subscribe to any of these fad diets. I'm not an extremist in any direction. I'm let's say a moderate. I eat a moderate amount of meat. I limit my carbs. I don't eat any sugar other than what comes naturally from, some fruits and vegetables. I probably eat more fruit than I should eat, but other than that, I eat pretty healthy. And I eat too many potato chips. I just can't give up potato chips. But
that's got a lot of processed stuff in there.
I know. It's literally, it's my one thing. It's like crack. I just can't. The potato chips are the one thing. So,
we'll talk about fasting next time, but yeah.
So, I do fast. I basically do intermittent fasting. I don't eat until about noon every day. My last meal is around 7:30.
No, we need to talk about long-term fasting, because that's the real effective stuff. Yeah.
But the one thing of all of this stuff I've read that really made sense to me, other than is it Linus Pauling with the vitamin C argument, which I really subscribe to, but it's the Eat Right for Your Type. It's your ancestors come from a certain region, so it's very much in line with what your belief is. Your ancestors come from a certain region. Those people had a certain diet. That diet has influenced your genealogy and your biology. And so therefore, you're meant to eat certain things and not meant to eat certain things, because your body doesn't know how to process them and digest them. And so that makes a lot of sense to me. There's even way more interesting arguments if you read the book. But it makes sense to me that your blood type dictates to a degree what you should eat and what you shouldn't eat. And by following more or less, when I find myself very strictly following the Eat Right for Your Type diet, I find myself, like you said, feeling very good. Now, you're obviously Asian ancestry. I imagine you're not an O-type blood type.
No, I'm B.
Yeah. And so B is the more flexible of them. A is definitely strictly, you should be vegan. O is really you're a meat eater. And B is somewhere, you're the moderate guy. So I find it interesting that you feel so good eating just meat, but
I got to tell you, I did the raw diet back when I was a vegetarian for a month, and I felt fantastic then too. Yeah. And I'm not sure what it was about that.
I've done that too, and I also feel amazing. But I just love food too much. It just kind of.
Well, I'm getting a lot of similar effects out of eating meat, and this again, like you said, it's probably more personal than we. And you need to probably study yourself just as much. But I'm just telling you why I am and what's worked for me. And it's actually pretty fun, because I'm smoking meats and doing a lot more grilling and stuff like that. Kids love that stuff. Yeah. So, in a sense, it's been kind of a fun thing for me. And I haven't eaten today yet, but I'll probably try to figure out what fun meat I can cook up in the next few hours or something. So anyway, we went off the deep end there, down one of these rabbit holes. Like I said, there's another huge rabbit hole with fasting that I can get you on. There's another whole one on the nature of certain things. Some might say that's kind of conspiratorial, Jimmy. Yeah, it is, but there's a reason why the
underlying reasons. Yeah,
wants you to like take so many drugs and stuff like that. So, we could talk about that some other time. But it's been fun.
We would definitely love to have you back on.
Yeah, it's really wild how the attitude towards Bitcoin and crypto, it affects everything. It's a lifestyle. It can be a lifestyle.
You start with trying to get rich, and you end up like, oh man, we can make civilization better by like opening people's eyes on a lot of issues. Yeah.
That's a big deal. Yeah, and you're a big deal, Jimmy. Thank you so much for coming. I do hope that we have you back on, and on or offline, I certainly hope we get to talk again.
All right. Well, one of these days we'll have to have a what I call a carnivory dinner. This is where I get like a bunch of people that are into Bitcoin and meet, and we just like have a dinner and talk about this stuff. And the stuff that people talk about at those dinners, oh my goodness, it's just so interesting because pretty much everyone has been like going down different rabbit holes, and they'll tell you about the rabbit hole that they've been going. So they're really, really fun. I don't know, like maybe sometime when I'm near you, wherever you guys are, we'll get to do that.
If you find yourself in or near Portugal, Spain, please let me know. I'd love to get together.
London next February, maybe you can come up for that conference.
Totally. Love to.
Okay.
Super cool. All right, Jimmy Song, come again.
Jimmy, thank you so much. Really a pleasure.
Yeah.